Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update and market outlook for Monday, June the 17th. I am filling in for Danielle tonight, doing the videos. So I want to get started here and we will look at the S&P. We've got a really big week, lots going on this week with the Fed on Wednesday, and of course we've got expiration Friday and quad witching coming up. So a lot can be happening this week, so we want to be able to get positioned in either case, and we'll talk about that here in just a second. But first, let's look at the S&P where what happened today. And as you can see, we opened here and we closed basically the same place. So it looked like this morning we were going to rally right out of the gate straight up, and then we faded, and we're going to rally again, and we faded, and just kind of chopped the rest of the day. Interestingly though, there was a voodoo line right here, a skyline, and we hit it. We hit it twice and failed. Kind of approached it there the next time, but I didn't. I'm not reading too much into that because I'm expecting chop going into the Fed. The Fed meets on Wednesday. They're meeting Tuesday and Wednesday, and they will announce at 1 o'clock Central with the policy statement at 1:30. So it's going to be very, very interesting to see what happens. Now, currently there is about a 70% chance that they will not hike at this meeting, and the hike is actually, if we get one, which I think we will, really looks like it will be at the next meeting in July. So this meeting, while we're not expecting a rate a rate cut at this meeting, the language of what the Fed says will be very important because, as we know, they are data driven or data dependent, and at this point they really don't have enough data to justify a rate cut. So we're in a very big dilemma here as far as what they want to do and what they will say that they're going to do or commit to doing. And the reason that that's important is that I think, I'm afraid that the market is kind of factoring all this in ahead of time. And what we'll see right here is, this big rally off this low, straight up, straight down, straight up, and, which leaves us here at just hugging 2,900 with a big question mark as far as how the market's going to react to whatever the Fed says on Wednesday. So I'm very uneasy about the fact that if they remain dovish or even amp that up a little bit, we stand to go higher for sure. And they'll want to do that. They'll want to keep the market happy and all that kind of stuff. But any misstep can obviously bring us down lower, of course. So it's going to be really, it's going to be hard for the Fed to do both, to do what they need to do based on the data that they have, and at the same time, say the right things to keep the market happy, right? So that being said, I am very light. I've got a couple of hedge positions on the S&P. On the downside, and I've actually got one on the upside. I have to hedge on the upside now because, again, if they remain, dovish and talk the talk, of course we will rally. Now it is interesting to know that we've got several squeezes on different time frames on the S&P, so the move can be even bigger. And after coming off this move off this low, again, it's anybody's guess. So I just continue to remain very light on the indexes at this point. I would not try to, I would not commit big money either way ahead of this unless you have a really big reason, a really good reason to do that. And again, I've taken some profits and just kind of I feel comfortable being in cash, kind of waiting. Now I'll reposition, right on the other side of the Fed. And one thing to notice also up here in the corner, the VIX is still at 1535 after a pretty decent move higher. You would think that would have come off a little bit, and of course it's everybody's a little nervous about which way we could go. So again, caution is the name of the game in a situation like this. One other thing to be aware of here is that in either case, I think it is pretty. If you do a 50% retracement off the low, from the low to the high here, it brings us down to 2650, and we, I hope we don't go there. But if we get bad news that the Fed disappoints, if some China news or whatever, now we've got North Korea again. There's all kind of things out there. If we do start going back down, that's realistic to think we could come back down there. We did not. This was unfinished. I thought we were going down there, and we did not. So if we come back down, I think 2650 could be in the cards. On the upside, very, very hard to say because there's all-time high. How much euphoria, how much great news, and all that kind of stuff, and how much is priced in. So again, be selective and be careful. Obviously, if we're going to be long, I want to be long names like Amazon, for example, and some of the other tech names. But for the most part, at this point, again, I remain super light. So hope that makes sense. Hope that's helpful. I know it doesn't. It may not give you. There's no trade direction here because I don't. No one knows which way or how the Fed's going, what they're going to say, or how the market's going to react to it, even if we knew what the Fed was going to say. So remain careful. Put a reminder on your calendar for Wednesday, 1 o'clock. That's when the fireworks may or may not start. If you're a day trader, scalper, there'll definitely be some moves around 1 o'clock, depending on what they say. If you want to try to scalp some of that with futures or even with just the S&P or some select names out there as well. But my advice would be to lighten up going into this and then kind of reposition as we get on the other side, because the follow through, it won't be a 1 day, a 1 hour, 1 day deal. We should get follow through. If it's to the upside, we'll get, we should get a lot of upside. If it's to the downside, we could get a lot of downside. So be aware of that. Now the next Fed meeting is July. So, that is when the actual rate cut might come. There's about an 87% chance of a July cut. And again, I think it's a 22% chance of a rate cut for this week. So keep that in mind. So anyway, I hope this is helpful, and be cautious this week. Going to have a wild week, and it's normally kind of wild going into expiration anyway, but then throw a big Fed meeting like this in on top of that. Just be careful. So that's all I've got for today. Thanks for the time, and I will talk to you guys at the next update. Thanks.